Happy Monday, everybody. I hope everybody had a great weekend. Today is Monday, August 16th, 2021, and this is your Monday market update video. So if you're ready for a slow week, time to catch your breath. Sorry, wrong week. We know that by many estimates, the consumer makes up close to 70% of the U.S. economy, and guess what? We saw consumer confidence come in under expectations on Friday, and so we'll get to that in a little bit. But this week, hold on to your credit cards. We're going to see earnings from the major retailers. We're going to see retail sales numbers, and so you could argue that this week's information may be some of the most important information that we're going to see in a while. Now, that's right back in the face of the idea that we've been talking about labor being the most important issue, but it really comes down to basically what's going on in the economy, overall economic data, what's driving the markets. And right now, as we come to the end of earnings season, it's going to be what the economic data looks like. So let's dive into last week's action, then we'll talk a little bit about what we're going to be watching for this week. So Monday was a bit choppy as we saw the JOLTS report come in, 10 million jobs available in the United States in July. COVID headlines were mixed, and the 10-year Treasury moved up a little bit. The S&P was down slightly. Tuesday was infrastructure day again. There was a lot of focus on the $1.2 trillion bipartisan bill. That was good news. Remember, there's a lot of runway ahead of that. There's a lot to do before anything substantive happens there. And the CPI was on the docket for Wednesday morning, and you saw some Fed speak, pour a little bit of cold water on what was going on. So the S&P closed off its high, but did close up slightly for the day. CPI was the focus on Wednesday, and the core number was a bit lower than expected. Inflation fears got calmed a little bit. The S&P 500 closed 0.25% higher. Thursday was a lot like Wednesday. On the positive side was jobless claims that fell a little bit, and the negative side was the hotter than expected PPI. But the tie goes to the runner. Upward momentum won the day. S&P 500 closed up about 1/3%. Friday opened strong on the heels of some important earnings reports from Disney and a couple of other companies, but gave most of it back when the consumer sentiment for August missed estimates. Market was stable, ended up 0.16% for the day and just under 0.75% for the week. We are noting that the market is ignoring the Delta variant to some degree. I want to mention that, and we've had some discussions of that and conversations over the last couple of weeks. So we should note that the current response to all of the COVID news is all about masking, not about lockdowns. So if we start to see conversation about lockdowns, which most conversations we're having says that's just not going to happen around here, then we should be okay. That the focus is that doesn't really affect consumer behaviors. People put masks on, but that doesn't really stop them from spending money, doesn't stop them from traveling. So we are starting to see a little bit of that. As long as we stay away from lockdowns, which almost everyone says we're not going to do, as I said, then we should be fine. So there is still hope that we'll start to see what they saw in the UK, which is that we're on the other side of this, or at least close to being on the other side of this. We're not there yet, but that's what people are hoping. So we are seeing some comments start to come about. Southwest Airlines, Airbnb, both announced last week that they have seen the Delta variant affect them slightly in the last couple of weeks. But remember, the kids are all going back to school. People are going back to work even more so. September, we'll see that again. But that's normal at this point in time. TSA numbers are still up over 2 million a day. So we'll have to see where this goes. Credit card numbers, that data still looks up pretty strong as well. So bottom line for now, the variant is inconvenient, and we hope people stay safe. But economically, it's not causing us to change our investment course. So a quick look at last week's economic data. It was pretty much Goldilocks. CPI and PPI were mixed, reminded us that inflation is here, but it's not strong enough that the Fed's got to change any of its actions or what we're expecting it to do. So as for this week, as I mentioned, Delta will be important if it starts to impact economic growth. We'll get some clues to see if that's happening. As I mentioned, major retailers reporting this week. The big ones we know, Target and Walmart are coming out. Home Depot and Lowe's are coming out. If we hear them make some conversations about the changes in consumer action, then that will be a headwind. We'll hear about how great their year-over-year numbers are. And if we hear that they've got what their outlook for the rest of the year is, that's what we're going to really key in on. If they're a little cautious on that, if they're cautious with what they've seen in the last couple of weeks, then we're going to need to make some. Then we may start to see some headwinds on this market. We'll also see manufacturing data today and retail sales report from July tomorrow. That may be the biggest news of the week, as I mentioned to you before. We will hear from Fed Chair Powell as well as a few other Fed governors, but as I said, I don't really think you're going to see anything. They're going to change their tune at all as they go towards Jackson Hole the end of this month. Most people are believing that we may see some information from them from Jackson Hole. Some people said they're not going to make any announcement at Jackson Hole, but we'll just have to see. The market is still expecting tapering in the next couple of months, and see how that goes. So this week will be time to watch the retail numbers, watch the Delta variant, and see what changes may come from that. Just to throw a few more things at you before we go, we've seen geopolitical issues come back into the world because of what's going on in Afghanistan, but I don't see that coming into play too much unless it does weaken the hand of Biden going into the infrastructure argument, but that's a whole different story as well. We also saw some overnight numbers from China that showed that we are seeing some slowing growth. So as I've quoted him before, Art Cashin says we're just going to have to stay nimble here, and that's what we're going to do. Most importantly, remember, this is the In the Weeds video. Remember, you know how I feel about it. I'm all for the long term, for the goals. We're making sure that we reach those goals. I hope you'll continue to watch our Friday videos on planning. That's where we really focus on how we're going to do that, and how we're going to focus on those goals. So as always, please email me, call me with any questions. As you can see, I'm still here in South Carolina, back in Chicago by the end of the week. So please excuse the casual gear. Anyway, have a great week, and we will see you soon.